All right, good morning. Happy Sunday. It is Sunday, September the 1st, 2024, approximately 10:54 a.m. All right, I know. I just did one last night, but I had to come with another one. And I'm not going to take too long to do it. So today, what I wanted to do is touch on and do a quick deep dive into volume. The true purpose of volume and how we should be looking at it and utilizing it for our trade setups or what have you. Doesn't matter what trade process strategy or what have you use, volume plays a part, whether it be by liquidity or, how the market moves, right? So let's dig deep into it. Let's dig deep into it. So let's see. All right, so we're going to use screen two here. All right. All right. I showed you this last night as part of my different screens and charts and setups or what have you. So here, obviously, this is my test chart. I'm gonna rename it or what have you when I get a chance. But I'm gonna utilize it for this particular discussion. All right. So volume, right? So majority of the videos and the things that you see when it relates to volume in the markets, right? We talk about how volume moves the markets, right? Volume this, volume that, right? But again, some of that really doesn't, it makes it difficult to really understand sometimes because so many, different things, about, different interpretations about volume and its use and everything, right? But I've come to understand in my experience and research, as I like to say, the true nature and purpose of volume and, a lot of volume, a little bit of volume, medium volume and things like that. After this video, you will have that same understanding and understand, how and why volume is important and how we can again better utilize it for our trade setups. Okay, so the first thing that sticks out, right, and it stands out like blue. You've probably heard it before if you heard about the volume profile, right? Are these nodes, right? So you see the high volume nodes, right? So what happens is these high volume nodes are the places on the price range, right, where there's the highest accumulation of volume. And like I said, I like this particular profile right here because of how it just pops out and easy to interpret or whatnot. So as you look at these high volume nodes, so on this side, we talk about sentiment. On this side is the actual, volume calculated, right? And it's really tick volume, because we're dealing with the foreign exchange market, or what have you, right? So this is really tick volume that we're utilizing, but still, nonetheless, it's a good tool to utilize, right? So here at this support level, we see that we're coming off of a price range of accumulated volume, right? In each area where you see that highest accumulation of volume, you see that price moved, right? Price moved. Now, what happens is a lot of the times is that when you have these large nodes, price is either going to reverse or that's where price is going to take off. It's going to take off one way or another, whether it's going to reject or, it's going to move through. This particular one, first, right? And this was an established zone, right? We had a reversal, right? Price pushed up and then it reversed, right? But it did it with a whole lot of volume added to it, right? So price reversed with a lot of volume. And we can see that indicative of not only the candle setups, right, but also at the price points, right? So this became a node that when price came back to it, it was going to have some type of reaction. And with this being sell volume, right, and us wanting to push the market up, I have a lot of buy orders that I need to settle somewhere, and I need that liquidity in the form of sell orders. This was a great place to do that. So this area was utilized as a liquidity area to continue to push the market up. So this is the role that volume plays in both moving the market. See, it doesn't require a lot of volume at these different points along the price range. Only at certain points along the price range do I need an accumulation of high volume. And then that can be in the form of buy volume, sell volume. You can kind of take away, if you took away whether it's buy or sell volume, right? And we just looked at the accumulation and the volume itself, that's what creates the zone, right? The volume, the sheer numbers and volume itself, right? So that becomes the catalyst to move the market. And here's a great way to think about that, right? All right, this is how they set it up. Right, we're going on a road trip. You know, you look at price movement as a road trip. You have a starting point and you have a destination, right? At your start point, before you get on the road, you do a lot of things, right? You get yourself together, you get everything together that you need to get together for that road trip to take you from here to there, from A to Z, right, to your destination, right? And one of those most important things you do is you fill up. You fuel up, right? Whether you have an electric vehicle, you make sure you're fully charged, or if you have a gas vehicle, or if you have both, right? You make sure that before you start that journey, that long journey, because you know that if you don't have enough fuel in your tank, right, for that road trip, you will not make it to your destination. Now, there are times along that road trip, right, where you run out of fuel, right? To make it to your full destination, because it just doesn't work that way, right? You have to stop somewhere again, get yourself together, fuel up again, right? To continue along your journey. You haven't made it to the destination yet, but you have to stop real quick, fuel up again, and then go further towards your destination. And you may do that a couple of times along the road. And you do the exact same thing when it's time for you to come back, right? You do the same thing. You get yourself together, right? You gather everything, you fuel up, and then you start your journey back. That's, if you think about that, that's what price is doing. See, the market makers and the institutions, they know where they want to push the market to, right? They know what the destination is. We as retail traders, we do not know what the destination is. So we have to understand and interpret the movement of price, right? When it's moving, when it stops, when it reverses, and all of that stuff. Why? Why is it doing that at this time? And our understanding of that, our recognition of that, and our understanding of that is what allows us to get into the market and follow the footprints and the steps of the institutional traders, the market makers, and everybody. And we make money alongside of them. So that's the importance that volume plays. Because remember, to move the market up along the destination, right? You're not utilizing all of your gas, right, at every single point along the trail, right? You're using a bit of gas here, a bit of gas there, a bit of gas there, but nonetheless you're using gas. Not as much, right, as you gather at that one time when you first fuel up. See, it's the areas that you go to fuel up and you stop to fuel up that you're gathering the most gas. It's the same thing with price. Those areas where we stop along the price, along the journey, those we're accumulating the most volume again to move the market in the desired direction. That is the part that volume plays in our trade setup. So when you're looking at and utilizing this this volume profile, it's giving you an idea of where price has the best chance of having a reaction, right? We don't necessarily know exactly what that reaction is going to be, right? But we have an idea based off the price range, right? And this is just the hourly. We can look at the 4-hour and the daily to get an even wider view, right, of where liquidity is and where we have volume sitting and what type of volume is there. But just because you have a bunch of sell volume doesn't mean the market is going to necessarily go up. And as you can see, just because you have a bunch of sell volume, right, and sentiment doesn't mean the market is going to go down. That's not how that works. How that works is it's based off the higher time frame and the intention. Like I said, take away the fact that there's a lot of sell sentiment right here and understand where the market is going. If on the higher time frames we're bullish, then more than likely this high volume here is going to be utilized as fuel to keep moving the market up, right? So that's how that works. It's about the accumulation of the volume itself and not necessarily whether or not it's bearish or bullish. That is about the intention on the higher time frames. That's why you have to utilize the higher time frames to understand where the market is going. If the market is going to break out of this area. And we see it didn't just break out, right? It had to come back, and gather itself and accumulate some more buy orders in this area, right? To go against these sell orders, and then we push back up, right? Because this was already an established area. There was already volume here. There was already orders that were right here, right? So what happened was we came back, we filled those sell orders with the buy orders, right? But we probably exhausted ourselves with the buy orders that we had. Then, oh, by the way, we probably triggered, some buy stop losses that were sitting at the top of here that pushed this market down, right? So that played a factor. So the market pushed down because we ran out of, the demand, which were the buy orders. So we had to recalibrate a little bit, set up some more buy orders, and then boom, we take off. That is what volume plays in our trade setups, right? And so we can see right here almost a similar thing. Now, what happens is as price is going, right, and we get to areas where there's very, very low volume, then that means that there's not a lot of interest, right? I probably have reached a destination for the time being. I'm probably going to stop here and rest a little bit because I'm not interested in going any further, right? So there's not a lot of interest already sitting, there. And again, we can go to the larger time frames to see what's really going on, at these areas right here. But on the 1 hour, it's not showing that we have a lot of interest right now. So price is going to take a break real quick and accumulate. We're going to accumulate and then determine that if this is going to be our destination, we're going to hang out here for a little bit and then come back, right? Or if we're going to continue on our journey right now. That may or may not happen. But our jobs, right, as retail traders, is to pay attention. We know now, right? Like I said, now you can't say that you don't know, right? That there's an accumulation happening right here in this zone, right? So that price is going to do something. It's going to probably continue to accumulate over the next day or so, right? And we watch what happens on Sunday, Monday, because we have holiday, right? So watch the accumulation and then see what it does. See if the market returns back to this area, right? Because we have low volume here. So there's a good chance that the market has is in a position to return back to this high volume area, get some fuel, and then continue to the upside if that's what it decides to do, right? So again, wanted to do a quick deep dive and give some information on exactly how volume works and how to best utilize it in our trade setups. So I hope this is understandable. I hope you like it and all that good stuff. As always, happy trading.